Hey guys, Darren here. Thanks for joining. Hey, this is the first stock market option update that we're doing. It's July 16th, so the market opens tomorrow, the 17th, and we've got some exciting things to talk about. We're going to talk about where the market is right now. We're also going to touch on interest rates, inflation, consumer spending, and some economic data in general. And I'm also going to share with you one of the accounts that I have where I'm trading options and share with you what I'm trading and why. I'm not going to get so deep into the strategies. As far as the strategies, check out my other videos. If you haven't subscribed yet, please do that. I'll put a link below. And also be sure and hit the like button. I need some help in getting this first one out, and it's really appreciated. And there's also a link to a free options workshop. It talks about the benefits of trading options over buying stocks outright. So with that, let's get started. All right, guys, so where are we in the market today? You can see we're right up at the 45.05 range. So we are up huge so far this year in 2023, about 18% already. And that puts us at an S&P 500 PE, price to earnings ratio, of about 22. So it is historically high. I like to really be long in the market when PEs are around the 15 range. 15 to 16 is a good time to get in and be long. So this is historically high right now. All right, let's talk about interest rates. The federal funds rate, which is the interest rate that is set by the FOMC, which is the Federal Open Market Committee. This target is the rate at which the commercial banks borrow and lend their excess reserves to each other overnight. So right now, for the July 26th meeting that's coming up here at the end of this month, there's a 96% chance that the Fed is going to raise interest rates one more time, up to the 5.25% to 5.5% top point here in July. This is baked in pretty much. It's going to happen. 96% chance. The Fed has to actually show some backbone and be strong and not weak on inflation. So that is going to happen. And then if we look at going forward in September, it's still expected to stay in the 5.25 to 5.5 inch range. And even through November, 5.25 to 5.5 here, and then December, you still see 57% chance that it's going to stay in that 5.25 to 5.5% range. So starting the beginning of the year, it gets a little bit higher. There is still, though, 41% chance, so the highest percentage chance that there'll be no change. So it's not really until March of 2024 that the Fed will look to lower interest rates to that 5 to 5.25. And this is based on, this changes all the time, but it's based on what is predicted and expected to happen going forward. So it's flat until March of next year, 2024, and then possibly a quarter point cut in March of next year. And they're hoping that this keeps inflation in check. All right, as far as inflation, the Fed typically shoots for 2% inflation historically. And the inflation numbers came out last week, and we're getting closer to that number. It actually came in at 3% for June. And the core inflation sank to 4.8%. So that's still lower than expected, both numbers. And that's why the stock market shot up and reacted positively with the market going up. The 4.8 is the lowest since October of 2021 for the core inflation rate. And the core takes out the food and the gas, which can vary and sways the report. So numbers are coming down, which is good. That means the interest rate hikes are working. And the Fed is still, though, committed to lowering at the end of this month in July. Now, the good news is if the economic data that comes in the next couple of months going forward is not what we expect it to be, and inflation is still happening, then we do have room now for the Fed to come in and cut again. And if the Fed does cut sooner than March, then the stock market is probably going to react positively to that, and they know that that's going to spur the economy and take the stock market up. So I think there is basically a ceiling because we are so high with already the big 18% gain in the market year to date. But then on the lower end, there's a floor, and it's not going to drop too much further, in my opinion. But again, who knows? But I like the fact that the Fed can cut and the market will react positively going forward, I believe. Let me know your thoughts. Leave a comment down below. All right, if we take a look at the FactSet Earnings Insight, we can see here that 80% of the companies have already reported, the S&P 500 companies have reported Q2 earnings. And right now they are anticipating a minus 7.1%, so a decline, the largest decline since Q2 2020 that we're in right now. Now, if we go down the report a little bit further on page 11, we can see that for guidance going forward for Q3, we've got 0.1% earnings growth and 1.1% revenue growth. So it is slightly getting better. And then in Q4, 7.6 and 3.2. So as we get further into the year, the earnings and revenue growth are expected to continue to get better. And then in calendar year 2024, they're projecting growth of 12.4% and revenue growth of 5%. So it looks like we may be out of trouble next year. However, companies are always going to play that game where they guide lower so that they can meet or beat the next earnings projections. All right, let's take a look at some of the trades that option trades that I've got on right now in one of my accounts. I'm using Tastytrade. I'll put a link down below. It's, I believe, the best option trading platform, and you'll kind of get an idea as we go through some trades here how intuitive it is and easy to use. Right now, you can get cash back when you open an account. If you do open and fund account with a couple $1,000s, $2,000, then the channel does get a little bit of credit, small fee for it, and it's much appreciated. And you need a couple thousand to make a few trades anyway, so check that out. All right, let's start off with crude. The first trade that I've got on here, I'm selling credit spreads anytime crude gets below $70. So it's at $74 right now, and I've got on the 68.67 credit spread. You can see I'm up 190. There's still $150 left in that trade in the next 32 days. I'm fine leaving it on just because if crude does come down and test it, I'm just going to put on more credit spreads. I always use spreads when trading futures just because the product is so big. And if we look at crude and the chart, you can see it's way down here. What I like is with OPEC, a lot of the countries that are in OPEC will only make money if the crude stays above $70 per barrel. So it kind of helps to set a floor because they will stop production and produce less, which keeps the price higher. Also, if the economy picks up, I think crude could get back to close to $100 a barrel. Not good for our gas tanks, but good if we're trading options here. And the other one is corn. I'm kind of doing the same thing with corn, credit spreads. Not as big a product, but I'm still using spreads. And you can see corn is way down here at lows. People love corn. I love corn. So I'm just getting long when it gets down in this range that I've been trading it in. And I've been consistently making money buying and holding when it's down at this level and then going long. AI. That's got to be one of the best tickers these days, right? I've got a strangle on in AI, made some money. Earnings is coming soon. So if you look over here, you can see the earnings on 8:30 that's coming. You can see the IVR, you can see the daily change. But if you look at AVI and the chart, or AI and the chart, you see it is kind of up there. But I've got the strangle on, let's see, between 32 and 50. So over here from this range up to this range. So kind of in that range. But it did have high IVR, and that's why I was doing a strangle and selling credit, or selling a strangle. But you can see right here the profit range in green. So I just went to switch to the curve mode from the table mode on the trade tab. And what I really like about this Tastytrade app is you can see where your short strikes are and then the profit range. So that's AI. AMD, I have been consistently selling iron condors. Again, you can see the profit zone in green. So I'm profitable if it stays between the 127 and 110, but even all the way down to the 95. So 127 to 95. And that would be, where are we at? We're at 115. So yeah, we're right in the middle. 127 down to 95. So we've got a pretty big profit range. I like AMD. It's a good company, good semiconductor company, and it's got a high IVR of 41, so we can get good premium with that. Now here, the bank stocks, I've kind of gotten killed in Bank of America. We look at the chart. It's come up a little, but I have not done too well. I've got on 2 leaps options. I was selling calls against those, but right now, if you go to the trade tab, we go to table mode. We look at the next, the August option. Let's see. Yeah, August 23. And for the 30 call option, we're only getting 62 cents, so $62. So there's not a huge amount of premium right now. IV is fairly low with 15. So I am just going to, earnings is just coming up this week. So I'm going to see where it goes. I don't know if it can go a lot lower, but it's a big bank that is going to do well. So I'm comfortable holding the leaps options, the long leaps options. Same thing with Citi. With Citi, though, I did add a strangle, the 46.48 strangle, and I'm in between the strike. Well, it's at 45.77, but I'm still profitable there, and then I've got a leaps option on. So we'll see how that goes. Typically, banks do well coming out of a recession. We're not we're right on the verge of a recession, but things are looking better now. So it'll be interesting to see how the banks do going forward. Goldman Sachs did recently come out and warned on their Q2 earnings and lowered expectations. So I suspect that the banks aren't going to do too well either. But again, I'm kind of in it for the long haul with the banks right now. Let's see, coin. If we so what I've been doing with coin, it's been trading within a range. So I've had on iron condors, and if we look here, I've made what, $350 over the last 180 days trading different iron condors. And what I did here was I clicked on the right, and what I like here is you can look at the option chain. So you can look at everything you did over the last 180 days, and or 60 days. 365 days. You can look at the different what you've done over that period of time, but done pretty well in coin. If we look at the trade range right now, I'm profitable from just under 90 down to 71, but coin did spike way up to 105. So I'm kind of hoping it comes back down here. There's been some regulatory issues that I guess are getting closer to being resolved. I need to look into that. I really like their CEO, and I think they've had trouble getting clarification, but I suspect because it's so volatile, just like crypto, that at some point it's going to come back down and we'll be okay. But again, still making money because of the high IVR and selling premium. DraftKings, I love this stock, especially if the economy takes off and interest rates come down, because it's a high growth stock, and DraftKings is dominating. I think FanDuel is number one, but any state that DraftKings goes into right now, they're taking 20-30% market share in online gambling. And more states are going to open up, so there's huge potential. They're also increasing their revenue per player. It's doubled in price over the last month, so you can see it's gone way up. And again, I've got, with this one, it looks like a poor man's covered call. So I've got a leaps option, 551 days out, and then I sold a 30 call against it. And they've got earnings coming up here on 8/4. You could also see the earnings over here if you go here to the overview tab and you look at 8/4. But if we look at the order chains, yeah, you can see it made almost $1,500 over the last 365 days trading in and out of it. But I'll probably before earnings just sell this call. I think that earnings will be good and want to be long. If they're not good at that point, then I'll buy another leaps or buy the stock outright and just be long going forward. Enphase, they do EV charging and a lot of solar equipment. And Enphase, I've been doing iron condors, and we're right now between 135 and 200. We're right in the middle of the range, it looks like. Yeah, the profit range right there. So we'll hold that one. Golding, I don't recommend. It's a 95 cent. I've got like 500 shares. That's kind of a long shot, but good gold mining company. IWM is the Russell, and we're at the top of the range right now with the Russell, so but still profitable. So may consider rolling up the puts, maybe cutting the delta in half. We'll see how that goes, but still 33 days, so we'll hold that. Meta's gone wild. It's way up at the top, so I'm pretty sure I'm short. Yep, I've got with 5 days, so next week I've got the 315, 325. So as long as we stay below that 315, then I'm profitable going forward. If for some reason it shoots up, I'll probably roll this out and up, and then add a put spread and sell a put spread as well. I'd like to have a position on in Meta. MPW is medical properties, and it's a REIT, and it's got a huge 12% dividend, and it's involved with hospitals and healthcare, solid fundamentals, and it should do well going forward. I like the dividend, and if there is a drop, looks like it's got earnings coming up on August 2nd, then I'll just accumulate more, because it's nice to have a little bit of diversification in real estate, as well as it's a healthcare play as well, with a huge dividend. So a lot of upside to MPW. Let's see, Netflix. It's had a big run up, and I've done pretty well, I believe. Trading iron condors, $1,530, and we're profitable right now. As long as it stays, it's shot up. So as long as we stay under the 465 within the next 5 days, so next week. But then again, it's got earnings, so we'll see how that goes. But I'm playing it to the downside. You got to have some downside plays. Can't have them all up, because then you can take profits and profit on both sides. Palantir, you can see we're up 966 on this trade. We've got 100 shares of stock. We've got a leaps option here, and then sold. So it's a poor man's covered call because I sold a call against it. And then we've got a strangle here of 14.18, and we're right in the middle. So if we look at the curve mode, you can see, yeah, above 12.5, we're profitable going up. So I really like Palantir. It's one of those stocks that's dominating and the high growth. So as the interest rates do get lowered and the economy improves, Palantir will continue to be high growth stock going forward. Schwab I've played in and out of and done really well. It's one of the banks that has done really well. And I sold Leaps back during that Silicon Valley Bank collapse. And yeah, I've made a little bit of money. Yeah, 16.21 going in and out. So any dips, I'll go in, and IV was low. So you can see here I did a call debit spread, and that is also it's basically a 50-50 shot, but I want it to move down just like or move up just like the put credit spread. So if we go here, you can see profitable as it moves up, and you can see it was way down, but then it's been slowly moving up. But yeah, anything below 60 bucks, I'll probably get more and stay long going forward. SoFi is a great stock. Everybody knows that right now. They're still unprofitable, but they're expected to turn profitable in Q4. They will grow into a major bank. They've come up. They were at like 4.5 just a couple of months ago, and now they're up in that 9 range. So yeah, but they could double and keep going up. So I'm in that one for the long haul. Any downturn below 9, I'm definitely buying. I've got 600 shares outright right now, but I just sold some and profited. But we'll look to get more of those. There is actually, yeah, let me finish this and I'll come back to SoFi. But SPX, I've been kind of trading that short, and the market's been going up. So I don't want to have too much on, but I always use spreads. And I've done okay in it, but with the market going straight up and being short SPX, I may switch that and add some put spreads and start doing those. But I've experimented with 0 DTE SPX. I like the fact that they're cash settled. So still playing with that, figuring that out. But with the spreads, you can't get hurt too bad if you don't add a lot more risk by widening out your strikes too much. You want to keep your deltas in line. As long as you have a bunch of long stocks as well as going short, or you could always go SPX long as well. TDoc, Teledoc. I didn't look at that one before the call too much, but I've got a couple of leaps. They're expected to do well. It's been down, but it's healthcare, telehealthcare, which I believe is growing, especially after COVID. I think people are still utilizing that. And I think it will continue to do well. Their fundamentals are good as well. Let's see, Tesla, they're dominant in the EV market. They're talking about their robo-taxi, but that's not quite here yet. But long term, they're dominant. I also have looked at Rivian. They've gone up huge lately, and I think they did 50,000 cars they produced. And that was the point when they started, Tesla started to kind of ramp up and be able to compete. And right now, Rivian is not as profitable, obviously, as Tesla or NIO or some of those others. But I think they're a player long term. And I think only the 8% of the U.S. right now has EVs, and it's expected to grow by a huge amount in the next 5-10 years. So I think Tesla will always do well. I've done pretty well in it, I believe. Let's see, we're right in the middle of my strikes right now, and it's always been pretty profitable. Let's see where we're at. Yeah, 625 bucks over the last few months. Then WFC, another big bank, Wells Fargo reporting this week, Leaps option. I'm holding a long term. I'm up a little bit on this trade, but yeah, it has moved up. But they're a great bank, so I like having the financial stocks right now. And then XOM, that's one I just put on as a placeholder here. I think energy and oil are going to do great, just like we talked about with crude up here. So I was thinking I need to buy some, put some trades on. So I'm thinking about a put vertical in XOM right now that I'm going to put on tomorrow morning. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. And let me know your comments. Let me know what you're trading today, what you're having success with. Any questions that you have, I'll be sure and get back to you and give you my best answer. Thank you for watching. Share the video with a friend and see you in the next one.